All right, everybody, welcome back to another edition of Market Talks with Dr. Stoxx. It is the 6th of February. It is the eve of the NFPs, non farm payrolls, and the unemployment rate. We get all that data out tomorrow. We've been getting some jobs data out along the way this week, the ADP, the jobless claims, the JOLTS. They've been leaning in, I would say, a modestly bullish direction, but the market is expecting a pretty big drop from last month to this month in the number of jobs created. They're expecting the unemployment rate to stay stable. I'm not sure that's going to happen. I'm looking for a 4.2. The market's looking for a 4.1. But here's the bigger concern for tomorrow, and that is that the BLS, the Bureau of Labor Statistics, is going to come out and revise their 2024 numbers. And most people are thinking that those numbers were inflated in 2024 because of the election to make it all seem very pleasant while we head into an election. No worries in the economy. And that the actual numbers were not nearly that high. And if we get a major revision to the downside, we could see some problematic stuff going on in the market as that gets priced in. We're going to look at the indexes here in just a minute, but let me just remind you that this is coming from the Dr. Stoxx live trading room over on the Dr. Stoxx website, drstoxx.com. And if you want to join me and see everything I'm trading, get a spreadsheet of all my opens, longs and shorts, entry, stop, target price, reasons for the trade, go over to drstoxx.com, click on the subscribe button, scroll down to the live trading room. We also have a brand new live options room, and if you subscribe to both, you get a nice discount. Okay, let's jump over to some charts. So here's what I'd like to do today. First, let me get to the indexes, and we'll start up here with the futures contracts. Actually, let's not. Let's go down to the ETFs. So we're going to look at ETFs, major indexes, and then I said this to the room. I didn't have a chance over the lunch break to update my charts, my watch lists, and I would like to do that live here with you all. And so I'm going to run some scans. I'm going to import the top stocks over into my watch lists, and then I'll run through the watch lists and I'll show you what I'm looking for generally for new buy and sell signals. Mostly buy signals these days because the market's up. Trending is up. Most of the major stocks are up. Most of the major sectors are up. And so we're not really focused too much on the short side of things. We're short Tesla right now, actually, which is working out pretty well so far. But we have to be very, very selective on the short side, and longs are a little easier when the market's going up and the volatility is not that high. Okay, so Dow. Here's the Dow. I just said in the room, this is a little bit of a scary chart because we got up very close to all-time highs a few days ago. It gave us a big bearish engulfing, gapped way down. This was Monday of this week, big gap down on Monday, and that was on tariff news, right? All the weekend, everybody's talking about tariffs, tariffs, tariffs. Canada, Mexico, China, EU. And then by the time we got to Tuesday morning, Mexico had capitulated, Canada had capitulated. I don't know what's going on with China. I don't think the EU thing is even on the radar anymore. But that caused the market to bounce nicely back up. Now, here we are back up again, knocking on the door, getting close to it of all-time highs, almost where we were on Friday at the open last week. And we're showing another red bar. So, yeah, we're having some trouble. Doesn't necessarily mean this is going to roll over, doesn't mean the top is in, doesn't mean a bear market is coming, anything like that. But we're having some trouble getting up through 450. 450 is a key number. We get a little bit above that, we start to hit all-time highs. We get above that, and it's off to the races because there's no overhead supply up there above 452 or so. But having some trouble today. Now it's low volume. We're seeing low volume all across the board. Likely this is just a little bit of profit taking, a little bit of positioning ahead of the jobs numbers tomorrow. There's a lot of fear going into that, and rightly so. But if we get anything that's sort of in line and not too distant from expectations, I think we'll see markets back up to the upside and even testing all-time highs. Here's the S&P 500. It's a very interesting pattern, right? So we actually did get all-time highs a few weeks ago. Then we had the big DeepSeek crack. That turned out to be a nothing burger, rallied back up, and then we had the tariffs crack right back down again. That turned out to resolve very quickly, right back up again. And now, so with that price action, we're getting a little bit of a, I don't know what you would call it here. It's not really a bull flag because a bull flag requires a long upside. We don't have that. It's not a falling wedge. It's just sort of a, I don't know, a little downtrending channel, a little bit of a some weakness going on here in the S&P. I think we'll have to be very, very careful because the path of least resistance right now, per the price, is to come back down and hit something like the 21 period moving average tomorrow. There's some good stuff going on, however. The trend is still higher. Where's my 50? I don't have my 50 on here. Let me get that back on. Yeah, we do have, and the 200's not on there at all, but it's way down there. There it is. Yeah, we've got stacked MAs, 21 bullish cross over the 50, 50 and the 20 and the 200. They're all rolling higher. The LRC, as you can see, clearly in an uptrend. So the trend is higher. The volume balance and recent trade down here, very good. And stochastics are nearing oversold. All of those can suggest that instead of the path of least resistance, which would be hitting resistance and falling back down to the downside, is a breakout move to the upside. But I tell you what, we're going to have decent in-line numbers tomorrow. Otherwise, all bets are off. I do think if we get a big gap down tomorrow, because this is all coming out before the bell, that it will be a buy opportunity. We'll probably see another good gap down and rally up into the close because there's just nowhere else to go. Frankly, there's nowhere else to go with your money if you want to make some alpha. You've got to go to American Stoxx. You've got to go to the major indexes. You've got to go to the big guys at the top, and a handful of other good growth companies that are starting to do some good things. There's nowhere else to go. So I do think that any kind of gap down is probably going to get bought back up, unless it's just a horrible number. If we get like a 4.3% unemployment rate, we get 80 jobs or 50 jobs without any sort of major explanation. If we get a big revision down for 2024 of, I don't know, a million, maybe we get a million revision to the downside. Yeah, look out below. All right, QQQ, this is actually pretty good. This is looking better than the Dow. It's looking better than the S&P. It's a smaller group, and so the big stocks at the top, right, the top 10 mega cap stocks are driving this market higher. They're the ones that are doing okay. Yeah, we've got some good volume balance going on. We did have the gap down on DeepSeek. We had the gap down on the tariffs, but everything bounced back up cleanly, and we're looking better today in the NASDAQ than we are in the S&P and the Dow. So that's good. Where is the money flowing? It's flowing into, for the most part, not all of them, but most of the mags are doing okay today. Here's a small cap index. So we got into this one earlier today. It was a big gap and crap. So it went up higher, came down off the open really pretty sharply. Let me show you I'll show you the 5-minute chart. Here's the 5-minute chart. So the open was right about here. It was all down on the open, little bit of a bounce, back down for a lower high and a lower low. And then we had this double bottom. See that double bottom right there at 229? We started to rally back up. We had a bullish engulfing. We had follow through, and that's when we got long. Initially, was going in our direction, and then as these things go, straight back down again. So here's the thing about the daily chart. This is the small cap index. We had a breakout this morning. It was trading above that key line right there. It's about 230. We were up above 230. Everything looked pretty good for a few minutes. And then as these things go, it was down. And as you saw, it's pretty choppy. It formed a double bottom, printed a buy signal, which is what I thought was going to follow through on. We were above the 50 at that point. We were edging back toward that breakout. And then things just turned south again. But it's very light volume. It's light volume all across the board today. We're still above this line right here, which is even more important. This is the 226 line, 227. Let's call it 227.50, 227.15, somewhere in there. That's a very thick volume shelf. I think any movement of the price into that yellow box is going to get bought back. As long as we're above the 21 period moving average as well, we should be okay. But we've got to stop on it. If we get stopped out, we'll move on. We've had a good week. We've put some good profits into the bank. We put more profits than we've taken losses, and we've had green after green after green week in the room. I can't remember the last red week we had it. I think it was mid-July, and here it is February already. I'm talking about weeks, right? So not months, but weeks of taking a loss. It's been a while. So you could say that we're due, but I'd rather just continue the streak. Let's just continue that. All right. So those are the majors. Take a quick look at gold is rolling over today. Doesn't look very good. You want to take profits on gold if you're long. We took profits on some miners, some gold miners over in the options room today. And it was a very nice gain, in fact, 300 something percent. Oil. So oil flashed a nice looking buy signal a couple of days ago, actually right in this area right here, that green stick on bigger than average volume, bigger volume than the day before. That was a buy signal. We also flagged a green buy bar on this indicator that I'm trying out. I still don't think it's working that well, but it's on my chart anyway for a while. And so buy, and we got long MCL, which is the micro E-mini for gold, not gold, oil, micro E-mini for oil, and it either hit our stop or I took us out for a small loss. I forget which one, but it was not a profitable trade because it was all downhill from there and just not getting any traction. I think there was some talk about oil being set aside from the Canadian tariffs, and then there was a compromise on that, oh, we're going to tariff oil anyway, but as the smaller tariff. That's a problem, of course, because that drives down demand. I don't know. I have not traded oil and energy well all 2024, and I put a moratorium on myself for all energy related trades and abided by that for months and months and months. And I should have continued to abide by that. I just saw those buy signals. They were so clean and clear, technical analysis 101, and they just didn't work out. That happens, right? The macro picture, right? The geopolitical picture, the macro picture, the regulation picture, the Fed, what the Fed is doing, what the overall economy is doing, those things always trump technical analysis. Now, usually all those get baked into the chart. You can read the technicals and you'll know pretty much what's going on in the macro picture. But sometimes they don't match up. And when they don't, it's always the macro over the technicals. So you got to pay attention to what's going on in the economy, in the political realm, and across the world. You know, there are guys who trade for a living. I don't do this. I need my sleep. But they get up at 2 o'clock in the morning to see what's going on in Asia. They get up at they tune into the European market. I don't do any of that. I just rely on news feed when I get up and at my desk at about 7. So that's plenty for me. I'm making money. That's all that matters. But there are guys who really pay attention to those other things. I'll just listen to what they have to say, right? Let them do all the work for me. Let them sacrifice their sleep. Okay, so I'm getting a little long-winded. I just wanted to look at the majors. Let's look at a few sectors because there are a couple of things going on here. So we have ARC, which is the disruptor growth software, trendy plays. You've got a lot of Tesla in there. You've got other EV players. You've got software names, some of which really shouldn't be in anybody's portfolio, but they are in there nonetheless. And it's been a pretty good run, I have to say, for ARC. So this is a very bullish setup that is forming here. Rounded bottom. You can even call it maybe a little cup and handle, right? Because we got up to the neckline a couple of weeks ago and pulled back, fake breakout, pullback, fake breakout, pullback. So it's forming a little bit of a handle here on this rounded bottom cup, a cup and handle continuation pattern, which is to say at the top of an uptrend. Very bullish, very, very bullish, technically speaking. Just today's not the day, but let's keep an eye on ARC because I do think that if maybe it closes a little gap, rallies back up, tags of 21, moves back up, I think it's got a pretty good breakout move coming. That's a nice base, very nice base, rounded bottom, always bullish. Yeah, this is almost ready to go, just not quite yet. So I like biotechs mainly because of this pattern right here. You've got a left shoulder, you've got a head, you've got the right shoulder, and this is coming at the end of a yeah, I would no, yeah, I mean it is a downtrend. Obviously, from the angle of the LRC, we are in a downtrend. The 21's below the 50, the 50's below the 200. That's inverse of a stacked MA. But yeah, yesterday's big candle. We were in Labu. We bought Labu down in this area around 96, I think. I guess it was yesterday we bought it. Did we buy it yesterday? Yeah, I think we did. Just before the breakout. Went all the way up to 102. No, I'm sorry. This shoot. This is XBI, which is the non-leveraged version of the biotechs. You'll see the same pattern in Labu. Let me show you that. Yeah. So here's your left shoulder, here's your head, here's your right shoulder, and then there's a neckline somewhere in there. I'm not exactly sure where to put the neckline, but we bought it. Where's 96? Maybe it was that day, but it was off to the races yesterday and giving most of that back today. We've got a profit stop in place. If it hasn't hit already, looks like we're probably going to get stopped out, at least for a small gain. These things happen, right? Especially in downtrends. This is why I try to get this idea across to a lot of the guys in the room. You know, sometimes they want to know about a chart. I take a look at the chart. Everything's downtrending. All right. Well, there are times when you can trade a bottom, recovery play, I call them. But man, you got to know what caused it to fall and have those circumstances changed, because if those circumstances haven't changed, you're not going to get a recovery. You're not. AMD is a classic example. It just keeps going lower and lower and lower. And people think, oh, valuation, and oh, it's a great company, and oh, funds are buying it. Okay, I don't care about the funds. If the circumstances causing it to fall haven't changed, and they haven't, it's not going up. So maybe that's the case for biotechs. I was thinking that with the new administration, I know we've got the big pharma under some pressure, but I'm thinking with lower regulations, lower taxes, lower rates, you're going to see speculative biotech, which is mostly what XBI and Labu are comprised of, are going to do better. So it's still on our watch list. If we don't get stopped out, we'll look to get back in. But today was not such a good day. Yesterday was great. Today not so good. Bonds are in a good mood, very good mood, and that's always good for stocks. It's just that it's got to get above that pullback line right there. It's having some trouble doing that today. I like Hack as a sector. You've got Fortinet, you've got CrowdSpace, you've got CyberArk, you've got Palo Alto. These are all the top names. Broke out yesterday on very good volume leading into that breakout, and then it's a back and fill day today. We're just seeing this all over the place. A lot of gaps up and crap, gap and crap kind of day in a lot of sectors. But keep an eye on it. If it comes back down and tests the neckline around 79.30, then you probably want to get on board something like Fortinet, CrowdStrike, and so on. Regional banks, always good to keep track of them. They do tend to get boxed up like this, where they go into a tight base for 2 or 3 weeks. And you don't want to get stuck in that range because you'll just feel frustrated holding on to money that's going nowhere. We poked out of it yesterday, a little bit of follow through today. Could potentially be setting up a leg to go higher. And the best way to play this is with DPST. All right, that's it. Now I'm going to run some scans, and I'm going to put these charts over into, because I'm running scans over in, I better not put it there. That's going to mess up my organization. Where can I put this? China. I better make a new list. Let's make a new list. Create new list. Let's just call this strong stocks. Okay, so I'm going to bring over, if I can find it, there it is. So this is the scanning tool I use mostly. It's not the only one. I do use TrendSpider now and then, and I use FinViz as well to run some scans. But this is Market Surge. Market Surge. So this is a product from Investors Business Daily. I'm a partner with Investors Business Daily, so I am biased. If you want to try it for, you get like 6 weeks under $50. Let me know. I'll put a link in the live room for that. Okay, so I just ran my A-list scanner, which is the best of the best, right? These are stocks that satisfy. You're going to see really perfect metrics here. You're going to see a lot of the A's. You're going to see height in the high 90s. You're going to see very big growth rates. You're going to see blue numbers over here. Probably going to see green candles over here, green triangles, and a very good uptrending chart. Um, so did four come up on the list? Yeah, it's number 6 down there. I have my my trend trade letter in this one. All right. Oh, this is going to be a problem. Every time I type in, I'll tell you what, I'm going to move the charts over to another monitor and then do this together. So let's just take a look through these AROC. And I can tell you pretty much right off the bat whether I'm interested in this stock or not. I want to see that it's uptrending, but I don't want to see it printing new 52-week highs. I don't want it just going straight up. I don't mind a pullback like today, but this is a little bit of a concern. But everything is doing this. Everything gapped up on the morning and came back down. So let's put that in. I think this is a pretty good one. I like the fact that it's dipping. Maybe it can give us a good entry. CLS, this one is straight up, right? So I wouldn't be interested in a stock that just goes straight up like that. It's a very low probability trade. I know it's very tempting to get on board. It's a FOMO reaction. I don't want to miss out on the next big leg, right? You have a big leg today. It's going to be a big leg tomorrow. Well, no, the probability, especially if you get several legs like that in a row, and Facebook is a great example. 16 days in a row, it went higher. 16 days in a row. Do you think you're going to get a 17th? I mean, I know if you're flipping a coin, right, it's a 50% chance every time, but that's not how it works in the stock market. You've got gravity working against you, and that gravity is called valuation. When you get too high, you get too rich valuation. The market's going to punish that like I don't know, what is a good analogy there? So CLS, not interested. It's going to have to cool off quite a bit. What else? Fortinet, here's our one. See how this is 52-week highs and then it's rolling back over today. Not interested until it comes back down. LRN is pretty much the same thing. See these little, I don't know how to get rid of that, but if you see these little black marks, there are 2 or 3 right there, and there are several others. This is an indicator, a technical indicator that is a very good one, actually. It's called the ANTS indicator. It only shows up in Market Surge. When a stock makes an uphill move on X number of days in a range of days, and I don't know what those 2 numbers are, and there has to be a certain amount of volume and a certain amount of upside return. If you have a certain amount of upside return, a certain amount of volume, and X number of days up in a given range, you get an ANTS dot, a little black dot. Typically, that's not a good place to buy it, but if you keep track of the stocks that get those markers and follow them until they hit a pullback to something like the 20-period moving average, that's usually a very, very good place to buy it. I'm not going to put Learn in my Stride, rather, in my watch list. No, I like Annette as a company, perfect metrics, but that big gap down on DeepSeek, the big DeepSeek gap down hasn't really recovered that well from it. That's a deal killer for me. I'm going to wait on that. 4, I like Netflix. I know we like already. It's just a soft consolidation, high tight base after hitting all-time highs, starting to move a little bit higher out of this is one that just is not living up to the rest of the market, right? There's no DeepSeek drop. There's no tariff drop here. So let's put Netflix on our watch list. This is a mining stock, so it's going to be up, 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 up. Mining stocks are going to cool off a little bit here. So with oil coming in, with gold coming in, not interested yet. We're long this one already. This is AVGO. We're selling put premium on this. It's been a very good money maker for us. This week it's been phenomenal. This is the deep seek. Didn't go down on tariffs. That's good. Filling the gap. That's good. Up above the 20 period moving average. All of that's good. This is we're already in this one, so we're not looking for a new position, but let me just put it on my watch list. CrowdStrike is another component of hack. That looks pretty good, so we'll put that on the list. Hold on. There it is. So Google came way down on earnings, but good news, it held the 50 period moving average. It's down on earnings, but the earnings were actually quite good. It was a double beat. They had some very good revenue numbers. I think the market will hold it here at this level, perhaps for a while. I'm very interested tomorrow in putting on a spread on this, but an income spread. And I think that's the way to play Google going forward. I don't think it's going to go down much further. 190 is kind of a good line in the sand. It can go a little bit below that. Like yesterday's low is probably the line in the sand. Don't think it's going to go up real quickly either, but we can just continue to sell premium. You don't need the stock to go up to make money from the market. You just need it to not go down. Or it can go down a little bit, just can't go down a lot. So I like Google. I'm going to put that in my list as well. So I know Interactive Brokers hit an all-time high yesterday. It sure did, and it's been up, 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 up. Here's your big power gap on earnings. Pay attention to any time the stock rallies high on earnings to a new 52-week high. That gap that it creates in the chart is almost always a strong line in the sand. Anytime it comes near that gap, like this one right here, that's a buy. That is a buy. Look for power gap on earnings to 52-week highs. Of course, it's going to be on big volume. And then buy the test, the first test, if you can, of the lower edge of that gap, or the upper edge of the gap, I should say, the lower edge of the price bars there. But it's too high up. It's reversing today, printing a bearish reversal. Not interested. Let's take a look at PLTR. Everybody's interested in PLTR. Lots of call flow in this one today. Yeah, so I did say in the room, here's your power gap. Tested it yesterday. 100, I think, is a line in the sand. I wouldn't be surprised if PLTR never goes below 100 ever in its history. This could be the next Google, the next NVIDIA, the next 10, 30, 50, 100 bagger. I'm just looking for a better entry. I hate to buy at such a rich premium above where it was trading just before earnings. But this is a classic earnings power gap setup, right? It's a revaluation of the company. The company revealed things to the market that it didn't know, and they were all bullish. And so now the market has to revaluate the shares. They're worth a lot more than they were prior to that knowledge being revealed. So yeah, I think 100 is a good line in the sand. Any test of 100, I think we had one this morning, is a good place to buy. I don't like to buy really big gaps up when they've just happened. I like to give it a couple more weeks. But anyway, we'll see. We'll see where it goes. I'm not going to even put it on my list, but if you are long PLTR, pat yourself on the back and don't sell those shares, please. Hang on to them. Here's a power gap. Came down the next day to test, right back up again. This is good. This is very good. Nice coming out of a rounded bottom. This is what I mean by a rounded bottom base. Breakout on earnings. I'm going to add this one because I'm kind of hoping that it will come back a little bit more, starting to today. AGI. This is a gold play. It's going to be just like AEM, Axon. Yeah, I like it. I like it. I like it. I don't like what it's doing today, but just about every stock is doing that today. And actually, wow, we just had a big slam on the QQQ. Let me show you this. Must be some news out there. It must be a headline. don't get a move like that in 10 minutes, right? From 528.50 down to 525.75. You don't get a move like that without a headline. So I don't know what's out there. Not able to watch the news right now. All right. So it's not a good time to be buying stocks anyway. So let's just keep busy. Let the market work it out. Maybe the numbers got leaked. Wouldn't that be something? Okay, I'm going to add on Axon. Let me just do a couple more here. So we've got DocuSign. I like this rounded bottom base. Started to break out and get back up to the upside yesterday. It's a big gap and crap today. Not so good. But we're testing the 21. Maybe not a bad place to buy it. Let's put that on the list. Here's Facebook. So this is 16. It's up again today. 17 days. I think I'm right. 17 days in a row, right? 1, 2, 3, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Oh, okay. It's only 14. Where did I get 16? Somebody in Twitter mentioned it was in Twitter. It has to be true, but I guess it's not. 14 days in a row. Very rare that you're going to get much more upside from here without a big pullback. So it's a very, very low probability trade. But if you're already long, I would hold it. That looks like a very good, yeah, it's just very good. Very, very good. Let's try ACIW. All right, so it's not really trending. Let's kind of pass on that one. Is there anything down here I like? GE Aerospace. That's not bad. That's not bad. So we're in the buy zone, right? This IBD buy zone, this purple box here. Broke out. There's your power gap. Came back to almost close the gap. Not quite. Rallied back up again. Now a tight little base. It's not moving around much with the market. So I kind of like that. If the market's up and down like we saw, and the stock that you're looking at is not doing those things, it's trading to its own drummer, and that's always a good thing, especially when the market's been experiencing, like today, big drops from the highs. So I like GE. The other one I wanted to look at is this one right here. Yeah, this also I like. This is one of the stocks I highlighted in my last IBD live appearance. They have a patented process where they make an aluminum alloy that is lighter than aluminum, stronger than steel, if you can imagine that. And the government has a massive contract with them. 90% of the planes that they're now making use their aluminum products. And trucking companies are using their aluminum to make wheels because it saves 20% on their fuel costs. So it's just phenomenal, absolutely phenomenal, and probably a very, very big play for a long time. I like what it's doing here. It's basing just above breakout, new 52-week highs. Earnings are due in about a week. That could be a problem, but it's been doing well on earnings last couple of times at least. Yep, all 3 times doing really well. I don't usually hold over earnings unless it's a long-term hold for me. But if you had to find one that you could hold over earnings, I think this would be one. All right, now let's do one last thing here, then I'm going to let you go. I'm going to bring back over the charts. Not Discord. Where are my charts? Hold on a minute here. There it is. Oh, why can't I bring the charts over? Here we go. There they are. Okay. So let's do this real quick. We've got our list, right? So we know that these are all strong stocks. They're trending nicely. They've got high relative strength. They've got really good metrics in the IBD, which means they're strong on growth, return on equity, accelerating earnings, good relative strength, and all the rest. Let's take a look to see if there are some good buy signals flashing here. Probably not just yet. All right, so I like this in the sense that it is a breakout. We've had a couple of times. There's your tariff crash. Got right back up again. Trending a little bit higher. We're still. I know it's a red bar today, but it was a new high and a new low relative to yesterday, and that's always a good thing. Earnings are coming up, however, probably not a buy until then. Aruk. I don't like these big red bars, and there's some distribution going on there. But just from a price perspective, it is forming a nice tight little consolidation right there. Now it's got to bounce back tomorrow. Otherwise, it's definitely a no-go zone. If it cracks that support line, you don't want to be interested at all. I wouldn't buy it today until that proves itself. It's got to get right back up, retain the 21 period moving average, give me some good volume, and show me really good strength throughout the day. And we're not seeing any of that yet. So we have to wait on that one. Netflix, I think this is one you could just buy it, put it in your back pocket, put it in a different account, right? Check back 10 years from now, and I think you'd probably see this up at around $5,000 per share. If it hasn't split, I'm sure it will by then. So it's not really a trade at this point. If you're looking for real bang for your buck, it's a pretty high probability that it will continue higher, but it's going to be very slow and sluggish. Um, so I'm not interested as a trade, but I think as an investment, yeah. AVGO, so we're long this one already. It's not a good setup here. This is not a setup at all for a swing trade long, but it's not bad for what we're doing, which is selling premium. So we'll have another chance next week to tomorrow to roll it out for another week. And we did take one big loss on that drop right there. That was a massive loss, and we're making both most of that back last week and this week. Happy to say. Let's see. Let's look at team. Why do we have that? Oh, I'm waiting for this one to pull back. Wait till it pulls back to about 300, and then it's a go. This one is aiming for breakout. It's a nice looking rounded bottom, right? Not a cup and handle yet, and it probably will form a little handle there. If you can buy it inside of that range there, which actually is where it is right now, so maybe you buy it now and just kind of hang on, but you might have to sit through a couple of weeks of some sideways churn underneath that level. It's typically how these things go, but we'll keep an eye on that one. DOCU, that's an ugly bar today, isn't it? Really ugly. Here's your recent trading range, and it's just not getting up above that. Now, what am I looking for when I'm looking at these kinds of charts? I want to know the trend. Easy to spot that with the LRC. LRC is moving from lower left to upper right. That's an uptrend. We've got the 21 above the 50. That's your near term, short term, medium term uptrend. And the 50 is above the 200. That's your long term uptrend. All of those are in place with this. So then what do? Well, you have to look at the bars. You have to look at volume. You have to look at levels of support and resistance. We hit resistance this morning, right back down to a support. Now, you don't buy it down here on a big red stick at support. You wait until you get confirmation. This could fall right out of bed tomorrow and keep on going south. We don't want that to happen. If it, however, reverses tomorrow, gives us a green bar, good volume, and shows us strength all throughout the day, then it would be a buy. GE, kind of like Netflix, big power gap up. It did try to close the gap, couldn't close the gap. That's always good. You don't want to see that gap close, right? So here's the bottom of it, and it's stayed pretty well above that level. Yeah, pretty well above that level, and rallied back sharply up, and it hasn't really had too much trouble with the big gap downs that we've seen in the market, and it's banging up here on all-time highs. So this is good, but again, like Netflix, it's not a swing trade setup. It's a pretty high probability that it's not going to go down very far, but there's a very low probability that it's going to go way up. It's going to take time for this to digest. Best thing to do with a position like this is to sell premium. Sell your 200 calls week after week after week. Put some protection down below it at maybe 190, 185, and you can make some income that way. That's my recommendation. This one, however, I really like. Now, it's got earnings coming up. As I said, it should do pretty well on earnings. Really should. And that's kind of the pattern that it's forming, nicely above the 200, getting very tight in here. It's really wanting to break out. You can tell the lows are getting higher. That means it's like punching on that door, punch, punch, punch each time it gets up there. Can't get through, But as I like to say, the more times you knock on the door, the more likely it is to break out. I'm going to put that on my greens list. It's not a buy. I wouldn't buy it until after earnings, but we'll see where it goes. All right, guys, I'm going to let you go. Sorry, I don't have time for chart chat. I better figure out what's going on in this market. Crazy market today. Supposed to be nice, tight, quiet, choppy, but I think Trump is probably foiling that plan with something that the market didn't expect. God bless everybody. Have a great rest of the afternoon, and I will see you back in the room in just a few minutes after I produce the video. Bye for now.